Bitcoin crash alert. Analysts predict Bitcoin could plummet to $15,000 in just 31 days. After briefly soaring above $70,000, Bitcoin has dipped to $67,000, sparking concerns. Despite robust interest and continuous Bitcoin ETF inflows, short-term profit-taking might push prices down. Currently trading at 66,865, experts highlight a potential for significant selling pressure. Even as the long-term holders increase, miners' revenue stability is crucial, but market volatility looms. Stay vigilant and prepare for potential turbulence in the crypto market. Don't forget to subscribe, like, and share, and let's start. So here we are starting off with Kenya to use Bitcoin mining to monetize renewable and hydropower electricity in deal with Marathon Digital. I have over 2,000 hardcore Bitcoiners who may help guide and lead in all the aspects of their Bitcoin journey. One of the primary functions I provide is to help them navigate both the Bitcoin market and the stock market in ways that turbocharge their Bitcoin staking goals. We don't trade Bitcoin, mind you, rather we trade everything else for more Bitcoin. Here is a clip from October 2022 in which I am having them pile into MicroStrategy for an 18 months turbocharged run, all with the sole purpose of getting more Bitcoin. Listen to my explanations very well, so let's go. Bitcoin scenario number 1 is happening again. Bitcoin is repeating the second cycle, PA, up only vibes. Bitcoin's quarterly chart is clear. Breakout plus retest equals moon. Weekly hidden bullish divergence locked in right above the previous cycle highs. Be patient, the best is yet to come. Bitcoin price drops. 2011 $35 to $2, 2013 $1,000 to $200, 2017 $20,000 to $3,000, 2022 $68,000 to $17,000. Higher highs and higher lows, exactly how any risk asset should perform over the long term. 2024 $67,000, almost at the last all-time high. So some people think we'll see that $40,000 level, but I don't think the chances of that happening are very high. But if it does go that low, I'll be consistently buying, so I'm going to take advantage of the lower prices. Justin, California is experiencing negative electricity prices of up to -$90 right now, but they can easily pull back their output. So they pay for the privilege of generating power. Bitcoin fixes this. Bitcoin mining is a buyer of last resort and can instantly switch off when there is not enough power generated. Just ask Texas how incredibly effective this is. Bitcoin faces correction after a peak. So, Bitcoin recently experienced a notable correction after surpassing the $70,000 mark, dipping back to $67,000. Despite a setback, investor interest in Bitcoin remains robust, as evidenced by continuous Bitcoin ETF inflows. This correction has not deterred investors who continue to see potential in a cryptocurrency. So why are Bitcoin ETFs important? Recent data reveals that US Bitcoin ETFs have accumulated 850,000 Bitcoins since January, with Grayscale GBTC ETF leading the pack, holding 289,280 Bitcoin. This accumulation trend underscores the sustained global interest in Bitcoin, suggesting that increased adoption could benefit Bitcoin in the long run. Bitcoin is currently trading at 66,865, reflecting a 385% drop in the last 24 hours. The price decline could be attributed to short-term investors capitalizing on recent gains and cashing out their holdings. What does current data show about Bitcoin? Despite a recent sell-off, the NVRV ratio for Bitcoin remains high, indicating many addresses are still profitable, as experts note that there is still a potential for a significant selling pressure. However, the increase in the long-short ratio, signaling more long-term holders, is a positive development for Bitcoin. Long-term holders are generally less likely to sell during market fluctuations, as moreover, Bitcoin's velocity has decreased, indicating fewer transactions and more addresses holding the Bitcoin, as Bitcoin miners' financial health is also crucial. If their revenue decreases, they may sell their assets. Currently, miners are relatively stable, with daily revenues rising from $30 million to $39 million last month. As key takeaways, Bitcoin ETFs have seen significant accumulation, indicating a sustained interest. The recent price drop may be due to the short-term profit taking. The MVRV ratio remains high, showing many profitable addresses as the long-short ratios rise points to more long-term holders. Miners' revenue stability is essential for market stability. In conclusion, we have, while Bitcoin has faced a recent correction, the underlying interest and adoption continue to be strong as the sustained ETF inflows and increasing long-term holders suggest that Bitcoin may recover and potentially grow in the future. Bitcoin bearish price trend sparks bullish predictions, and why is that? So Bitcoin fake out before the next leg up. Since the 15,500 bottom, we have witnessed a similar pattern in Bitcoin as price consolidates inside a range for a few weeks or months. Then it breaks down below the range, trapping all the bears, followed by a quick reclaim and another leg up. And if the pattern repeats, we're going to see a massive leg up soon. Reiterating the same viewpoint, Jelly and independent analysts drew a pattern with Bitcoin's previous cycles and said, Bitcoin is still following a similar path to 2016-2017 once the 2021 all-time high breaks. There will be no stopping the king, bring on $100,000. What's on price front? Contrary to widespread expectations of Bitcoin's bull run, the leading cryptocurrency at the press time was down by 3.71%, trading at $67,000 level. However, despite Bitcoin's negative price action, key technical indicators such as the relative strength index remain above the 50 level mark, and the moving average convergence divergence line positioned above the signal line confirm bullish sentiment. Bitcoin's RSI mirrors 2017 upswing, $75,000 essential for Bitcoin value. Key points: Bitcoin is showing signs of repeating its 2016 bull market trend, with a significant breakout expected at $75,000 at the current Bitcoin price actions is similar to early 2017 according to trader Jelly, with the relative strength index playing a major role. Bitcoin is displaying a pattern that parallels in 2016 bull market with a significant surge anticipated when it crosses the $75,000 threshold, as Bitcoin's price echoes 2017 trends. Analysts often draw comparisons between the current bull cycle and previous ones, especially 2016, 2017, and 2020-2021 cycles. Despite 2024 marking a new all-time high before a block subsidy halving, there is ample data suggesting that Bitcoin's steepest gains are yet to come. So the relative strength index is a significant factor in this scenario, and according to the trader Jelly, the RSI measures whether an asset is overbought or oversold at a given level. On the weekly time frame, the Bitcoin USD pair presents an intriguing picture. RSI indicating bullish divergence. Bitcoin is playing out incredibly similar to early 2017, Jelly stated. A chart accompanying his statement compares Bitcoin USD performance on its way to its 2017 peak of $20,000 to its journey from January 2023 to the present. Return to 60K. Opinions vary on Bitcoin's short-term prospects. Some predict a drop to 60K or even lower, as the recent preliminary approval of spot Ethereum exchange-traded funds in the US has had little impact on the performance of either coin. So that's kind of all the information we got for today's video. Don't forget to subscribe, like, and share. See you in the next one, and peace.